Hi, good morning, everyone. Welcome to Quantsapp and welcome to pre-market analysis. So let's quickly go ahead and analyze few important data points out there in the market and power ourselves for the upcoming trading session. So let's start. Let's see what moved the index yesterday. So we saw a good move happening on Nifty and Bank Nifty, specifically on banking stocks. We saw a lot of good momentum going around there, and we saw a positive momentum happening in the market, and we can finally say markets are under some relief after few trading sessions. So talking about what were contributing to yesterday's up move, mostly all of the stocks except Britannia, Power Grid, CPLA, and BPCL, which dragged the index down. Rest everything was positive. Up move in Nifty, it was 133 points up move in Nifty. Bank Nifty, all the stocks in green of Bank Nifty, and yesterday we saw a 1.1 percentage up move in Bank Nifty. So a good move happening on both the indices front, and most of the stocks were contributing positively, which was a good sign. Let's see SGX Nifty. SGX Nifty is closing at 17,471. So yet another day of negative opening is what the SGX Nifty is pointing towards. So to move forward with where the historical build-ups are, so let's say Nifty. So after a lot of time, so but again, if I just show you all what is the kind of structure that you're seeing, short and short covering cycles. So there are few up moves happening in the market, but all those up moves are led by short covering, right? Instead of fresh long. यानी कि कल का जो सेशन में अप मूव आया था, that was just because of short covering, not because of fresh longs getting added. So you should not be surprised if market gives a dip yet another day. So there was a short covering happening on Nifty front. Let's check how the options open interest data is placed. So if you see how the options OI data is placed, so 17,500 is the level where highest call writers are standing right now, and this is where this is where we might expect market to take first resistance, and 17,500 will act like a first hurdle for us when we are trading in the markets. 17,600 also, if I see, you can just figure it out looking at the chart that it also has significant open interest. So 17,500 to 17,600 is the zone where market might expect a thrust. Yeah, if I want to go long on Nifty, 17,400, so we will wait for a dip to happen around 17,400. That is one of the lucrative levels to participate. Your reward to risk could be maintained. So more 50-60 points drop from here, that is the level we might expect market to take support somewhere around 17,400. Okay, but if 17,400, 17,350 is broken, then we might see again down move happening on Nifty front. Okay, so if I just look at the chart, so where we can see, so yesterday's low was 17,417, but this low, if this low is getting broken, 17,350, as I mentioned earlier as well, that if 17,350 is broken, then we might see again a down move happening on Nifty front. Talking about bullishness, 17,500, 17,600 are the strike price which have huge quantum of open interest on Nifty, right? So either a buy on dip or maybe not doing anything in the market today is what data is right. As long as I am concerned, it feels if buy on dip, right, and wherein if the market respects 17,350, that is the first thing, right? If not, then maybe I'll not go ahead and do anything on the directional front today. Or else another thing is if these highs are getting broken, so 17,550, right, which comes close again to 17,600, because that is where the highest call is on options. So on the upside on a breakout, so at least wait for 17,600 to get taken out, but that might be too far away, right? So that is the reason. Dip, yes, obviously 17,400 is the dip wherein you should at least try to observe the index. Bank Nifty. Okay, Bank Nifty, few longs getting accumulated in Bank Nifty with huge quantum. That looks fine. Now just see Bank Nifty. See, this is where 40,500, this is where highest put writers are and the heaviest call writers are at 41,000. So if I want to go long, 40,500 is the level where I will try to capitalize. So dip some anywhere around 40,500 is something where I will try to capitalize on Bank Nifty. Okay. So let's see what sectors were moving yesterday. So most of the sectors moved positive. Okay. So see, most except pharma, which again in recent days it is creating a contra view with the market, wherein whenever market goes up, pharma slightly collapses, right? Somewhere here and there. Yesterday also we saw the same story. Pharma dropped yesterday, but marginally. But rest, if you see net, most of the sectors were positive, right? So let's see where the stock specific action is coming from. So stock specific action. So India Mart. So the reason is very simple. Despite in the falling market, it didn't witness a lot of short build-ups, right? All the dips in India Mart are owed to short covering, right? And yesterday also we saw a significant long build-up with huge quantum. Okay, so let's see how India Mart options data is placed. So India Mart's options data is placed in such a way wherein 5,000 is the level where highest call writers are standing, right? So India Mart breaking above this level, we might see these call writers to get trapped, and then we might see a good up move happening on India Mart. So India Mart right now, right? What the idea is to capitalize on it whenever it breaks and sustains above the highest call wise strike price, which is 5,000. Okay, India Mart above 5,000 is only the trigger point, not before that. Okay, India Mart sustaining above 5,000 levels is where we will try to capitalize on India Mart. Let's see how the charts are looking. Okay, so see, a typical breakout is what we can see without even looking at a lot of indicators. So see, this is where 5,026, you can consider this high as well, that if this high is getting broken, then we might see again a good move happening on India Mart. Okay, so India Mart, to repeat, 5,000 is the level. Keep this on your watch list. Maybe not today, but tomorrow, day after, jab bhi aayega, it might start paying you out good things. Let's say Coforge. Coforge is the second stock. The reason is right on our screen. A lot of long build-ups happening in Coforge. Coforge, if I look at the options activity, so what I can see, a lot of hurdles on the upside. But yes, if there is a dip because of long unwinding around 4,200 level, Coforge is another pick for me. But in Coforge, buy on dip is the strategy. What one should try to capitalize is what I feel. Okay. Ban list, no stocks in ban, new expiry. So we are able to see that there will be no stocks in ban, whether possible entrant or exit. Okay, in the ban list. So to summarize on Nifty front, we saw short covering cycle still exists in Nifty, right? So the bears are still aggressive. So yesterday's up move was okay, but it was due to short covering. So thrust on 17,500 and 17,600, huge call writings are happening. So you can sharpen your trades maybe on intraday level, looking at the order book data. Elsewhere, 17,400 is the level where the first support, the highest put is. So if someone buys that 17,340 is kind of a net stop loss somewhere around that is what one should consider, because that is the important support of Nifty. If that is getting broken, then we might see a downward happening on Nifty. The 17,400 is the level where you should try to watch out Nifty for, with 17,350 340 zone being a kind of a stop loss. Coming to the other part, Bank Nifty looked decent when we looked at the historical built up. Options data showed 40,500 is the highest put, right? And the 41,000 is the highest call strike. So anywhere around the highest put strike is what, again, in the banking index as well, we can try to capitalize on. Then we saw about Coforge and India Mart are two stocks which are in typical long and winding cycle. And yes, that was it from my side. But before taking any trades, do take a calculated risk. Go ahead and consult your financial advisors before taking any trades. This is just a learning. This is not any sorts of advisory. So thank you so much. Be a data driven trader. Bye bye.